Yo, what's up, guys? Welcome back to another stock portfolio update. It's been 3 weeks since our last video, and in that 3 weeks, our portfolio has grown quite a bit. I've added a new stock, and remember, this is the portfolio where once I buy a stock, I can never sell it. So if you come back in a long time, I will have these exact same stocks. So if you subscribe, I would really appreciate it. So in our last video, which was 3 weeks ago, my portfolio was worth about $800 in that video. So now it's worth $1,630 when you include this instant buying power. It hasn't gone through yet, so that's why at the top it hasn't updated. But anyway, I'm actually now going to show you the new stock that I added to the portfolio and show you how it's done. Because look at Bill.com, this stock fell 33%. It reported earnings, they missed expectations by 5%, and it sent the stock down 30%. So that sucks. But anyway, we have some stocks that are doing really good. Like look at Fiverr stock. We're up 15% on it. And Fiverr actually reports earnings tomorrow. Oh, here's where you can see where I bought it at. This purple line down here at the bottom is my average cost basis line. And the orange line is where it's at now. So it's done pretty good. It was up 10% yesterday. This is the stock that I believe will 10x in my opinion, not financial advice. But another stock that reported earnings since my last video was ticker symbol PERI. And there's my cost basis. And they went up 10%. That was right here. They went boop, went up like crazy right there. I'll talk more about that stock later. But the new stock that I added to the portfolio was ticker symbol Cube or CubeSmart. Now, this one is a REIT and it's a dividend stock. It yields 5.4% right now. And I wish I bought more, man. So ever since I bought it, it went up instantly and then it went up again. I'm like, this is still a good deal. So I bought more and then I bought more again, but it keeps going up. And why is it going up so much? It has a lot to do with how interest rates are doing and how the market thinks interest rates are going to go down. But I wanted to show you a stock that reported earnings today that went crazy. This is really good for my Robinhood portfolio. It's extra space storage. It went up 9.4% today. It's in the S&P 500. It's the largest gainer in the S&P 500 today. But it went up like crazy today after it reported earnings yesterday after the bell. But we're going to do some CubeSmart analysis and I'm going to show you why I bought it and why it's still an incredible deal right now because it has fallen quite a bit from its peak, but it hasn't fallen quite as much as its peers as extra space storage. That's because it has much better financials, which I'll show you later. And I wanted to do some updates on these other last stocks here. So DocuSign stock, it's still up 1%. This one reports earnings in like a week or two, but we're right there at our cost basis line. So no real updates here. I'm still a strong believer in this one. They have a lot of cash on hand, and I bet they're milking interest rates. And oh, and quick side note, I think Fiverr is going to beat expectations tomorrow. That's why I hold the stock. I think they're going to beat expectations by like $5 to $10 million, which means they're going to beat expectations by 10% in my opinion. But anyway, let's keep going. Let's look at ticker symbol TLTW. Now, this one I think is going to do tremendous in 1 year. Come back in 1 year, and I'm going to have some insane returns on TLTW. This one is a covered call ETF on ticker symbol TLT, which is the US 20-year Treasury bond. And I just want to buy more, but it keeps going up, and that shouldn't stop me because I'm barely up on the position. But I really want to buy more of this ETF right here. It's run by BlackRock. It has a 0.35% expense ratio, I believe. I need to double check that. I should know that, but I forgot it for some reason. But anyway, now let's go to Bill.com, the stock that fell like crazy. As you can see, I bought it here and it fell more. I was buying some right there, hoping I would buy it and they would be earnings, but they didn't. And I bought it a final share right here. I bought it right on that green dot. Can you see that at 61.55? It's at $62 right now. Hopefully, I bought it at the bottom. Hopefully, the stock doesn't fall lower. If it does, RIP the portfolio. But anyway, that's why you got to stay diversified and have multiple different holdings. Like, I'm glad I own Fiverr right now because it's helping my Bill.com losses. That's why if we go to our total position profit and loss, we're only down $69. And this Bill.com is down, it made us lose $157. So thank goodness I'm diversified. And my next deposit, I have like a couple $100 I want to buy, but all these stocks, I don't want to buy it after it keeps going up. Like I already did that. I already bought it after it went up. I want to buy so much CubeSmart because now we're going to go do some analysis on CubeSmart and show you why I just want to keep buying this stock. It's such a good deal in my opinion. So here's CubeSmart. Their dividend yield right now is 5.31%. They just reported earnings, so we get a look at how the earnings were. Clearly good because the stock went up like crazy. So net income, it says down 9.41% year over year. That's because they sold some assets 1 year ago and it's comparing it from them. We can look at the operating income and see it's much more steady and the total revenue as well. But anyway, I wanted to show you the balance sheet. This is super important, so please pay attention. So the assets were 1 year ago $6.37 billion worth of assets. Now they're 6.23 billion. So the assets went down just slightly. Also, the debt went down, but the assets went down. But if we go to the core FFO, it's actually up 3.81% year over year. So they're getting more profitable with their properties. They're raising expenses. And I love the self storage industry. This is a self storage REIT. So $168 million in the most recent quarter. Let's see how much their dividend costs from that. So their dividend literally only costs them $110 million of that. So they actually have room to raise the dividend. And they're going to raise the dividend next quarter. So you see this dividend yield of 5.3%. It's actually more because if we look, they've stayed at 49 cents for 4 quarters. That means the next quarter they're going to raise the dividend. Who knows, to something in the 50 cents. So that's going to be really cool. Another thing I wanted to show you is, are they diluting you? Because Realty Income is diluting you 15% year over year. This one is only diluting you 0.13% year over year. So 1 year ago it was 224.5. Now it's 224.8, and we can see how much money that actually is. So they actually bought back stock in the most recent quarter. It wasn't much, $79,000, but the fact that they started to do that is really good. And I think they're going to plan to continue doing that because they have their debt under control. If we look at the other REITs, so remember this ratio right here, 53.91%, okay? So 53.91% assets to liability ratio. Let's see what Extra Space Storage is doing. This is their competitor. I also own this stock. It went from 64% to 67%. So having less debt in this environment is really good. And in the case for CubeSmart, it'll save you from your stock dropping this much. It's really unfortunate, but hey, looks like they're recovering today. 9%, a 9% gain on a dividend stock. That is absolutely crazy. So I'll have to dig into the financials of them because I'm gonna really enjoy doing that. Oh, and if you guys want to download the app that I'm using, it's called Moo. And if you want to use my affiliate link in the description, I would really appreciate it. We'll both get some free stocks if you download it, and it'll help me out the channel. It'll help grow my portfolio. And also, if you want to support me and my channel, all revenue I make from this YouTube channel is going to be invested into this portfolio right here. So if you want to hit the join button and become a YouTube member, I would greatly appreciate it. Of course, you totally don't have to. So the last stock I wanted to really talk about here that reported earnings was ticker symbol PERY or Perion. And I wanted to do some analysis on their most recent earnings report because clearly they were really good. So let's actually dig into that right now. They're a very profitable company, no debt. So we're not going to do some deep analysis, but I just wanted to show you some quick highlights. Net income growth 28% year over year, very steady and consistent. Look at the assets growth, so 767 million. It's now 940 million with a 1% less amount of debt on a ratio basis. Operating cash flow of 15%. But anyway, let me show you what they're doing with their cash on hand. So they have zero debt, all right? So now they have $197 million of cash, up 15% from 1 year ago. They're holding so much cash. Why? Because they're getting so much from the high interest rates, from the money market funds, the 1 to 3 week treasuries. That's what a lot of these companies do. They made $6.1 million of pure profit just in the most recent quarter. And for a small cap, this market cap on this company is $1.33 billion. And where I bought it, it was 10% less, but it's still a relatively cheap valuation for a company that has $200 million of cash on hand. So thank you guys so much for watching. If you enjoyed and want to support me, consider hitting the join button